A very good morning to our lecturer, Mrs. Nuriza, and to my fellow friends. My name is Vasundra, and my group members are Neshwarna, Amirul, and Daniel.
Hi, my name is Nishana, daughter of Patipan from D81C.
Accounting concepts. Table of the content. Definition of the prudence. Explanation of prudence. Example of prudence. Advantages and disadvantages of prudence. Definition of substance over form. Explanation of substance over form. Example of substance over form. Definition of the prudence. Prudence concept is a general guideline. Ultimately, use your best judgment in determining how and when to record an accounting transaction. Explanation of prudence. Under the prudence concept, do not overestimate the amount of revenues recognized or underestimate the amount of expenses. Also, one should be conservative in recording the amount of assets and not underestimate liabilities. The result should be conservatively state financial statement. Example of prudence. Prudence would normally be exercised in setting up for understanding allowance for doubtful accounts or a reserve for absolute inventory. In both cases, a specific item that will cause an expense has not yet been identified, but a prudent person will record a reserve in anticipation of a reasonable amount of these expenses arising at some point in the future. Advantages and disadvantages of prudence. Advantages of prudence. It gives a base to the companies on which companies could build or prepare their financial statements according to this principle. Ensures the financial statements present the realistic and fair pictures of a company's revenue and liabilities. It helps in the minimization of losses. It helps in not overestimating as well as not underestimating the financial risk of a company, makes the comparability of financial information possible. Disadvantages of prudence doesn't always necessarily consist of correct facts. You cannot apply the prudence concept to cultures that are outside of the IFRS or the GAAP. A company may try to create provisions which are not required that may result in the creation of some secret reserves. Definition of substance over form. Substance over form is an accounting concept which means that the economic substance of transactions and events must be recorded in the financial statement rather than just their legal form in order to present a true and fair view of the affairs of the entity. Explanation of substance over form. The fact of substance over form is central to the faithful representation and reliability of information contained in the financial statement. By placing the responsibility on the preparers of the financial statements to actively consider the economic reality of transactions and even to be reflected in the financial statements, it will be more difficult for the prepares to justify the accounting of transactions in a manner that does fairly reflect the substance of the situation. However, the principle of substance over form has so far not been recognized by IASB or FASB as a distinct principle in their respective framework due to the difficulty of defining it separately from other accounting principles. For example, IAS 17 leases requires the preparers of financial statements to consider the substance of lease arrangements when determining the type of leases for accounting purpose. For understanding, an asset may be leased to leases without the transfer of legal title at the end of the lease term. Such a lease may in substance be considered as a finance lease if, for instance, the lease term is substantially for entire useful life of the asset, or the lease agreement entitles the leases to purchase the asset at the end of the lease term at a very nominal price, and it is very likely that such option will be exercised by the leases in the given circumstance.
My name is Muhammad Amirul bin Muhammad Yassin. I from class D80-1C.
Payment voucher. Introduction. Payment voucher is an expenses confirmation document that has been made in cash or check. Among the use of payment voucher is the payment of employee salary. The merchant will keep a copy of the document and the original document will be given to the payee. This is example of blank document payment voucher. Example, employee salary. In the document, payment voucher must have first one is company name, asal it's been issued. Number two, no of payment voucher. Number three, this document is to who. Number four, the date. Number five, transaction. Number six, the amount and the total amount. Number seven, signature of approved by. Number eight, and the lastly, signature of receiver. This is another example of payment voucher bill. Things should be in the payment voucher document. The first one, payment voucher number, PV number. Number two, voucher issued business name and address. Number three, transaction date. Number four, company name. Number five, signature of approval. In the payment voucher document, there is PV number or number of document. In the document, number is set according to series number, month and year. SSL, the Companies Commission of Nation. Production. Regulatory and professional bodies in Malaysia. The Companies Commission of Malaysia or Suruhanjaya Syarikat Malaysia is a statutory body formed in 2002 under the Companies Commission of Malaysia Act 2001. It serves as an agency to incorporate companies and register business. It also governs the business information provided by the company to the public. It plays an important role to improve corporate governance practice in Malaysia. The CCM is responsible for the administration and enforcement of the following regulation: Companies Act 1965, Registration of Business Act
1956. Trust Companies Act 1949. Cotu Fund Act 1 1971. Limited Liability Partnership Act 2012. SSM statutory function, due and administration of prescribed law. This following based on the last slide. Agent for the government in administering, collecting and payment of prescribed fees. Regulation of corporation and businesses. Promote corporate governance, corporate responsibility and business sustainability. Enhance and promote the supply of corporate information. Research and studies on corporate and business activities. Advising the minister on corporation and businesses in relation to the prescribed law. Important lesson to be learned before embarking on reform. Planning, study of internal and external requirements. Study the needs and educating the customer or user. Have a backup plan. Implementation, either in phase, gradual or big bang approach to site, local environment, effective monitoring, stakeholder engagement, buy-in or awareness. No matter how good the system is, if there is not buy-in by the user, the initiative will not work.
Source of documents. A source document is the original document that contains the detail of a business transaction. A source document captures the key information about a transaction, such as the name of the parties involved, amounts paid, if any, the date, the substance of the transaction. Source documents are frequently identified with a unique number so that they can be differentiated in the accounting system. A source document is also used by companies as proof when dealing with their business partners, usually in regard to a payments. Some of the important type of documents used in accounting are as follows. Memo. Source documents are frequently identified with a unique number so that they can be differentiated in the accounting system. Keep a diary of repayment due on loans. Record personal information for inclusion in report. Present alternative valuation of assets and liabilities in report. Record ratios or percentage for use with the corporate allocation function. Generally, system treats memo accounts like balance sheet accounts, carrying forward balances from one year to the next year. They do not have customer or supplier details. It is a good idea to give all your memo accounts codes which are quite separate from other account types so they can be easily identified. Example of memo is cash memo. Sales and purchase are the main features of any business enterprise. For recording cash sales and cash purchase, cash memos serve as source documents. Cash memo is a source document in which all transactions pertaining to cash sales or purchases are to be recorded. When goods are purchased by a business enterprise on cash basis, then the firm receives cash memo, and when a business enterprise sell goods, it gives cash memo in which all detail of the transaction relating to the purchase or sales viz. Number or quantity, purchase, sold, price, discount, received or allowed, and sales tax collected or deposited are provided. On the basis of cash memo, these transactions are then recorded in the book of accounts. In audit, the foremost duty of the auditor is to verify the cash book with reference to the cash vouchers. The specimen of cash memo is as follows. The example of cash memo is this. Next, check. A check is an instrument drawn upon a banker and payable on demand. The bank issue a booklet containing check from to its account holders. Digits mentioned on the bottom of the checks denote code of state, bank, branch, check and type of account respectively. Through checks, payment can be made to a specific person by writing the name of the party after the word pay and by striking off the word bearer with a line printed on the check. In this case, check is called an order check. To avoid any fraud, checks are crossed by drawing two parallel transverse lines across the check. Sometimes the word "Enco account payee only", not negotiable, or name of the bank is written within these lines. In that case, check becomes a cross check. Payment against cross check cannot be received simply by producing the check. Cross check has to be first deposited in the bank account of the account holder in whose favor check is drawn, and only through his account payment can be withdrawn. Payment can also be made to any person who bears and presents the check. In that case, check is called a bearer check. A check is signed by the drawer mentioning the amount and name of the party to whom payment is to be made. Concerned person can get it and charge directly. The account holder can also withdraw the money from his account by writing the word self. Specimen of a bearer check and cross check are given below. Format of a cross check. Next, format of a bearer check. And lastly, format of a self check. Thank you.
Sales ledger and purchase ledger. Sales ledger. Number one, the sales ledger is your record of sales and how much you are still owed. Number two, on the balance sheet, the total amount still owed to you by customer will usually be called trade debtor or account receivable. 3. The sales ledger has an account for every customer. Each such customer account carries all the transactions for the one customer. These are sales invoice, sales credit notes, payments received. Example for sales ledger. Purchase ledger. Number 1, the purchase ledger is your record of your purchase and expenses, whether or not you have paid them and how much you still owe. Second, on a balance sheet, the total unpaid bills will usually be called trade creditor or account payable. Third, the purchase ledger has an account for every supplier. Such as supplier account carries all the transactions for the one supplier. Number 1, purchase invoices, purchase credit notes, payments made. Example for purchase ledger. Thank you for watching.